I'm Charlotte McLeod with investingnews.com, and here today with me is Garrett Goggin, founder of Golden Portfolio. Thank you so much for being here.
Thank you, Charlotte. Nice to be here.
Yeah, really good to have you, and it's our first time talking, so very exciting. I thought just because it is our first time speaking, we could start with just a brief introduction to yourself and your work in the industry.
Yeah, sure. I work with Stansberry Research and gold stock analyst for 15 years. I just went on my own to bring you the truth at the Golden Portfolio. Originally from Boston, from the traditional finance industry, MBA from Babson College, CFA, charter holder, and CMT technician as well. But, I follow the data. I follow the money. That's where I find the opportunities.
Yeah, so going out on your own, really, it seems at quite the perfect time for this. I've been following you, and I know you said recently gold stocks are the cheapest they've been in decades. So where do you see the best value right now among the gold stocks?
Yeah. So right now you have gold at $2,900 an ounce. You have gold stocks. The GDX has done okay. It's up 20% last year. It's up a little bit this year, but you need to dig deeper. And if you start looking at these companies based on a free cash flow basis, using the current gold price, these miners are undergoing a stealth gold crash. You're able to buy dollars of value for dimes and quarters. And the only other times the gold stock sector was this undervalued was 2020 and 2015. Both major sell-offs in the market. And that's why I call it a stealth gold crush, because we even had a major correction in the market and the gold stocks are trading at crash type valuations.
Yeah, maybe you can talk a little bit more about that stealth gold stock crash, because I was in your presentation this morning, as I was telling you before we turned the camera on, and it makes sense when you explain it, but it wasn't what I was expecting to hear.
You got to dig deep. When people use the chart of gold versus a gold stock or the GDX, and the alligator that's going to close where the gold stocks are going to catch up, that's never going to happen because you're comparing apples and oranges. You're comparing gold, which is the world's reserve currency for 1,000 years, unencumbered. It basically is very little cost. And versus gold stocks, and all stocks, I don't care whether it's a gold stock or Google or Amazon or whatever, it's all valued off free cash flow per share profits. You need to be increasing profits on a free cash flow per share basis to drive the share price higher. That's what Agnico's done. If you compare a chart of Agnico free cash flow per share versus a stock price, it follows each other. There's a 96% correlation between free cash flow and the stock price. So, that's what I follow. And you need to dig deeper. You need to look at the underlying valuation of how much profits you're getting for each share versus the valuation, either looking at market cap or enterprise value. So right now, people are looking at the gold price, 2,900. They're like, it's expensive. People are looking at gold stocks. They're like, well, gold stocks must be expensive too. We're at the exact opposite end. It's really weird. There's the Buffett indicator that I talked about. The Buffett indicator talks about, compares the Wilshire 5000 broad market index versus the underlying US GDP. It's as overvalued, much more overvalued. It's at a peak. There was a previous peak in 1970. There was a peak in 2000. There was a peak in 2020, and now there's a peak now. Both of these mark major overvaluation in the sector. Warren Buffett can't find value in the traditional growth companies because it's overpriced. But what this overvaluation also shows, it shows we're at the cusp of a secular shift from growth to value, because you're able to find value in the cyclical companies. That's why I stated in my presentation, Buffett is coming for Newmont. Newmont, if you look at free cash flow per share versus enterprise value, Newmont's trading at a 50% discount to free cash on a regression. It's never been this undervalued ever. It represents an extreme opportunity, and a value investor like Buffett would find this attractive as well.
Yeah, and maybe we talk about, that's very interesting. So maybe we talk about some of Warren Buffett's history when it comes to gold and gold stocks, because everybody knows his quotes about gold, but gold stocks not necessarily the.
Well, see, that's when I say that, it doesn't matter whether it's a gold stock or Amazon or Google, it's all profits, it's all free cash flow. I don't care whether it's a gold company or a tech company. You're buying profits at a discount by investing in the gold sector. Warren Buffett got invested with Berkshire in 2020. 2020 was one of the peaks of the Buffett cycle. And then, he held it for a few quarters. But, there's no value in the market right now, and there's extreme value in the gold miners. One other thing regarding the Buffett index, if you look at the years of the major peaks, 1970 and 2000, that was also a peak in the dollar, right? So this shows you that there's a big secular shift going on right now, that in Trump and Scott Bessent, the Treasury Secretary, said we need a lower dollar, right? That's what's going to be happening. They're going to be managing the dollar lower. We're going to have commodity companies. We're right at the cusp of a good commodity cycle driven by a lower dollar, and you get the gold price to $2,900 an ounce. Seems expensive, but based off 1970 and based off 2000, it's not expensive, because both those times before, gold went on a 10x run over the next 10 years. And I look at sentiment in the sector as well, right? Now, I follow the money. I look at shares outstanding of the GLD. It's an ETF. So when money comes in, shares go up. When money goes out, shares go down. The GLD shares outstanding just upticked a little bit for the first time in years, just this past week. Its shares outstanding is hundreds of millions of shares less, each representing a tenth of ounce of a gold than previous peaks. And these bull markets always end with all the investors piling in all at the same time, driving it higher for a brief period of time, and then that marks the top. And you can see that in every chart when the shares outstanding rips higher. And we're at the exact opposite of that. The GLD ETF had more assets in it than the SPY, the broad market ETSB 500 ETF, in 2011. Now it trades at 12% of the value. The GDX ETF, during the ramp up to $2,900 an ounce gold, the GDX shares outstanding sold off 20%, plummeted, tanking. It's an absolute stealth bear market crash in gold stocks right now. In the sentiment, people think it's overvalued because nobody is invested. We're the exact opposite of what people think.
Really interesting. And just continuing on the Buffett is coming for Newmont idea, are there any other gold stocks that meet his criteria, or is this solely a Newmont?
No, you're asking the perfect questions. All right. So the Lassonde curve, right? You get the Lassonde curve. I run the golden portfolio. The golden portfolio finds value in the Lassonde curve. First valuation trough is that first drill hole, and then it takes years to prove out the resource, build a reserve, and the stock ramps up. It takes years. Stock ramps up over that time. It goes through financing. Often dilutive, they got to raise equity, although the past couple deals have Wheaton took down with Rio and then Montage that were really shareholder friendly, and it was great to see. But take a look at Montage or Rio. So Montage, they have Kone. It's worth $2 billion. You know what the stock trades at? 400 mil. These are profits that you're getting at $2,900 an ounce of gold. $2 billion worth of profits. The stock only trades for 400 mil. The Lassonde curve teaches us that miners are worth the most on day one of production, right? Why? Because they mine, and as they mine, the reserves drop. So it becomes worth less and less and less every single year. That's why a lot of institutional investors don't like the sector and avoid it. But you're able to spend 400 mil and get $2 billion of value back from it. Rio Alto, you're able to spend 200 mil. They have Phoenix, that's worth $1 billion at 20,000 tons a day. It scales 4x to 80,000. So the NAV could increase 4x, but you're buying dollars worth of value for 20 cents. And like I said, doesn't matter. It's profits at a discount. And these valuations show where we're at in the whole mining cycle, because, when we start nearing a top, but we're going to see, the market cap and the EV of these companies rise above their true NAV value. Right now, they're selling at an 80-90% discount to their true value.
Yeah, and maybe it is a good time to ask you, okay, for gold, where are we in that cycle specifically? Anything you can add?
Yeah, no, just I presented in Germany in November. And I had a really good feeling Trump was going to be good for gold. Why? Because America loves the truth. Trump wants to bring America as a truth, and gold represents the truth. Scott Bessent was going to be Treasury Secretary. One of his major holdings was gold. I think he sold it since to become Treasury Secretary. One of Trump's economic advisor was Judy Shelton, who tried to nominate to the board of Federal Reserve last time. She proposed a 50-year gold back bond. But see, gold's the only thing that can help the United States right now. They need to devalue the dollar, but they need to maintain treasury demand, right? You get China selling treasuries. They haven't bought a treasury in 10 years. Russia obviously doesn't own any treasuries. The Cayman Islands, a quasi-government hedge fund, is like the 5th or 6th largest holder in U.S. treasuries. Why? Because the Caymans is a lot of offshore U.S. government hedge funds buying U.S. Treasury debt to provide the demand to keep yields low. Because we have $37 trillion of debt, all financed the short end. We need to move it to the back end. Gold, and the other thing, gold is a superior asset to treasuries as far as a store of value for countries. Why? Because if you run afoul of U.S. foreign policy and you own billions of treasuries, Scott Bessent presses a button and boom, your access to it is gone. Billions gone. Whereas gold, you hold it in your central bank. It's guarded by your military. No one's taking it unless they take your country over. The nations are going to gold. There's a tremendous amount of demand. And that's been the recent run on the gold price. But, you look back to the Buffett indicator, right? 1970, 2000, the dollar was too strong. They weakened it, and we are at the top of it. So even at gold at $2,900 an ounce, like I can't even imagine how far it might go.
Yeah, of course. That was going to be one of my questions. What is the price potential for gold? And right now, we just don't know.
It's like I can't quantify it. I can measure investor sentiment. No one owns a GLD. Nobody owns gold stocks. And at the peak, there's peaks where it's been up to 15% of all, traditional investment assets. And we're at the other end of it. So I believe we have a long way to go.
Yeah, interesting. You mentioned that lack of interest in gold. And one of the questions I think a lot of people have is, okay, all right, how does that interest come back in? Is it something like Warren Buffett doing this Newmont thing? Like what is that?
The deal, I was talking about this at one of the other conferences I was at, but one of the persons believed, the gold industry needs better marketing. And I'm like, all right, marketing. They're like, they need marketing. They need sexy marketing. I'm like, what's sexy? Money, profits. That's what investors seek. And the average mining company has not been able to increase their profits on a per share basis. That's what investors want. They haven't been able to do it. Mining's a tough business. But at this point, the value in the sector is going to be so compelling that the value investors are going to start coming. You're going to see some headlines. You're going to see the price of gold stocks moving up. And then as the price starts moving up, it's going to start chasing all the fast money, and retail investors are going to start piling in. And then, like crypto tokens have billions of dollars of value with Trump coin and Millennia coin. They have like nothing backing them. And you can come out and I could create a coin like after this interview's over. But the thing regarding the gold reserves and gold explorers, at least you got gold backing it. You know what I mean? So, and there's no money in the sector. And I believe there's going to be a time when, reality sets in and the compelling value opportunity, it becomes apparent and people are going to pile in.
That kind of ties into another thing I was going to ask you. Would you go down the chain to the juniors in gold?
Yeah. It's going to start off with Newmont, Barrick, Kinross, Agnico, Anglo Gold. The majority of them are trading, at close to fair value. Newmont brings them down. The average large cap miner is trading at a 20% discount to fair value based off free cash flow right now. And the thing is, it's like in my presentation, I talked about, like playing blackjack, right? You count cards, you count tens, you count non-tens. The deck is stacked with tens. So the odds are heavily in your favor that you're going to get 21 blackjack and the dealer's going to break. So you load up and you don't always win. Sometimes you lose, but the odds are in your favor. And right now, everything I look at, the odds are in our favor because you have a free cash flow line that's up here. You have the stock price way down here. And usually the stock price is above the free cash flow line. And free cash could come down, production could fall, all-in sustaining costs could go up, the gold price could fall. But more often than not, when I've found the deck stacked in my favor like this in previous opportunities within the gold sector as well, good things happen.
Okay, and just to go back to the Trump administration, and you'd mentioned there are people who think favorably about gold who are behind him.
Yeah.
Is that a signal that this administration is going to be more favorable toward gold? You know, we have all of these things going on, like the Fort Knox gold audit, the tariffs, the gold coming in. What is your sense?
Yeah, isn't it crazy?
It's like, very crazy.
It's like every day. And then I've been busy today. I haven't been able to look. And then on Twitter, Elon Musk is tweeting more stuff. The Bitcoin reserve just came out. But that's why the U.S. is going to revalue gold on their balance sheet, right? That they hold at $41 an ounce since 1970 to the current gold price, or maybe higher. I don't know. But then that creates an economic surplus, right? An accounting surplus. They're going to use that to establish their Bitcoin reserve. So they don't have to print any money or use any extra money. They're going to revalue gold. And then, there's so many things going on. Elon Musk tweeting out about Fort Knox and the gold in Fort Knox. It's obvious something's going. And gold's the only thing that solves the government's problem. To have a lower dollar, to maintain stability in the treasury market, and to keep the world's world reserve, U.S. as the world's reserve currency. Gold is the only thing that the U.S., Trump can do and Buffett can do to maintain faith in the dollar while devaluing the dollar at the same time versus the other currencies.
Really good to go over your thoughts on gold. Anything else that you're watching in the gold industry right now? There's so much going on. What would you pull out?
I don't know. The extreme discount that Newmont offers right now is going to provide fuel to the fire. I just think the average investor sees gold too high. They believe gold stocks too high. You need to dig deeper into the profitability, the extreme. So I saw a lot of presentations today showing profits and free cash flow per share based off on the fourth quarter. The fourth quarter's gold price was like, I don't know, $2,300 an ounce. No one modeled it forward to the current gold price. I model things off of the current gold price on a daily basis. The free cash, it goes through the roof. And I just think the spread between reality and perception, that's the opportunity. The perception is gold's too high, gold stocks are too high, they're bad investment. Whereas the reality is they've never been more profitable. And they've never been more highly discounted. So value investors are going to be attracted to the sector whether or not they like gold or not.
Yeah, so that's the message. And I know it's called Golden Portfolio, but before I let you go, any other metals, commodities that you like right now?
Copper. I like copper. I like gold, copper, big porphyries. Those are the ones I follow. Some of the other industry, they follow lithium and uranium. It's just, they go up, they go down. It's a little too speculative to me. I like staying the course, on my gold and silver miners.
All right.
Yeah.
All right. Well, I think this is really good. I feel like I've got a pretty good grasp on what you see coming. Any final thoughts you would leave investors with?
No, but it just, the Buffett indicator, right? It's all tied together. The Buffett indicator shows a secular shift between growth in value and growth in cyclicals. The dollar was the peak when the Buffett indicator peaked, and we're at the beginning of a secular trend of a weakening dollar, and which is going to be a great time for all commodities.
Okay, well, I think that's a solid place to end it on. Thank you so much for taking the time to come by. This is really good.
Excellent. Thank you, Charlotte.
Thank you. And once again, I'm Charlotte McLeod with investingnews.com, and this is Garrett Goggin.